Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at IREN.
If you find our talks useful, please consider subscribe, like, and comment underneath, because today we have a really fascinating one.
We really do.
Yeah, so imagine for a second trying to power a small city, but instead of lighting up homes or, running hospitals, every single watt of that electricity is just channeled into thousands of microchips.
Right, and they're running at basically boiling temperatures.
Exactly. I mean, that is the literal physical reality of the artificial intelligence boom right now. The demand for raw compute power is just violently colliding with the limits of our global energy grid.
It really is a bottleneck.
It is. And today, we're looking at a company sitting right at the center of that collision, which is IREN.
Yeah, IREN is super interesting right now.
Because they're undergoing this massive foundational pivot, right? Going from a low-cost Bitcoin mining operation into a dedicated AI cloud powerhouse.
Which is not an easy transition to make.
No, not at all. But why should you care? Because recognizing a successful business pivot early, like before the broader market really gets the mechanics of it, that is a cornerstone of smart wealth building.
Absolutely. Catching that exact inflection point is where the real opportunity lives.
Right. So let's start with the raw numbers, because the scale of their ambition here is just, well, it demands attention. Looking at their trailing 12-month revenue, they're sitting at $501 million.
Which is a solid $500 million baseline. But we have to remember that's primarily driven by their legacy Bitcoin mining.
Yeah, the AI cloud services are barely contributing yet, and their net income over that same period is $86.9 million.
Right, which translates to a diluted earnings per share of about 39 cents.
Right, 39 cents.
But we really need to contextualize the margins here. They have a 17.3% net profit margin and a 3.5% operating profit margin.
Which, in the data center world, is pretty significant.
All right. Exactly. I mean, high-performance computing is incredibly capital-intensive. So showing any level of operational efficiency at this stage, it's a massive indicator of management competence.
Right. They aren't just burning through capital to inflate the top line. They're actually extracting real profit from all that power consumption.
Yeah, but that $500 million in revenue, that's just the scaffolding for what they want to do next.
Oh, yeah. Their stated target is $3.7 billion in AI cloud annualized recurring revenue.
Yeah.
And they want to hit that by the end of 2026.
Which is a staggering leap, from $500 million to $3.7 billion.
It's a completely different stratosphere. So to pull that off, they're buying hardware, a lot of it, like 50,000 NVIDIA B300 GPUs.
Which is just, I mean, that's a $5.8 billion purchase order right there.
Plays through Dell.
Yeah. But they didn't just buy them on speculation. They secured a $9.7 billion AI cloud pact with Microsoft over 5 years.
Wow.
So they're dedicating that exact GPU capacity directly to Microsoft's workloads.
That Microsoft contract is kind of the linchpin for this whole thing, isn't it?
Oh, absolutely. I mean, hyperscalers like Microsoft, they don't sign $10 billion deals based on just a pitch deck.
Right. They need guarantees.
Exactly. Rigorous audits, uptime guarantees, power redundancy. So having Microsoft on board completely validates IREN's AI cloud ambitions.
It feels a bit like a highly successful freight train company looking at their rail network and just deciding to build a commercial space fleet.
That is a great analogy.
Right, because they have this heavy, reliable cash generation from Bitcoin, and they're leveraging that to just launch into AI. But I have to push back on the math for a second here.
Sure, let's hear it.
So they reported $245.9 million in trailing operating cash flow, which is healthy.
Very healthy for a miner.
Yeah, but they're doing a $3.5 billion CapEx plan, plus the nearly $6 billion for the GPUs. How does a company with an enterprise value of $13.2 billion manage that kind of spending without just completely drowning in toxic debt?
Yeah, that's the exact disparity that trips up a lot of retail investors. You can't finance a multi-billion-dollar expansion out of the daily cash register.
Right. So where is the money coming from?
Structured financing. They've already secured $9.3 billion in funding.
Okay, $9.3 billion.
Yeah. And this isn't like a massive high-interest credit card. It's a mix of secured debt facilities, project-level financing, and probably some strategic vendor financing through Dell.
So the Microsoft's contract comes into play here.
Exactly. When you have a $9.7 billion ironclad contract from Microsoft, lenders look at that future recurring revenue as highly secure collateral.
So Microsoft is essentially acting as the ultimate co-signer for the debt.
Pretty much. It totally de-risks the capital injection for the banks. And meanwhile, the Bitcoin mining is providing that $245 million in baseline cash flow.
Which keeps the lights on.
Right, and covers overhead and services the immediate interest on that new debt. They're using the daily liquid cash from Bitcoin to bankroll the AI expansion.
And I noticed they aren't paying any dividends. All free cash flow is going straight to growth.
Exactly. It's a state of pure, fully funded growth. That's why the balance sheet doesn't look unmanageable relative to their $13.2 billion enterprise value.
Okay, but capital alone can't be the whole story here. I mean, anyone with enough money could just call Dell and order 50,000 GPUs, right?
In theory, yes.
So what stops a bigger tech giant from just completely outspending them and crushing your market share?
Well, you can buy all the silicon on Earth, but if you don't have the specific physical environment to plug it in and run it, you basically just have incredibly expensive paperweights.
Oh, right, because of the power constraint.
Exactly. The real competitive moat in the AI revolution isn't the chip, it's the physical power grid and the land connected to it.
And this is where their Bitcoin legacy comes in.
Yes. They operate a vertically integrated data center platform sitting on over 2,000 acres of grid-connected land.
2,000 acres. I mean, that is the size of a small municipality, just dedicated to computation.
Right. And they have a multi-gigawatt development pipeline across the U.S. and Canada. Plus, it's 100% renewable energy via RECs.
Which is huge for the ESG goals of a company like Microsoft.
Massive. And you have to realize, these aren't traditional cloud storage data centers. AI workloads running on dense clusters of B300s generate extreme heat.
Right, they need liquid cooling.
Liquid cooling, reinforced flooring for the sheer weight of the racks, and unprecedented power density per square foot. These are purpose-built industrial facilities.
So they've already jumped through the hoops that would take competitors years.
Exactly. Upgrading high-voltage lines, local permitting, utility queues that takes years, sometimes a decade. Capital can't bribe the laws of physics or local utility bureaucracies.
No, it definitely can.
And IREN already navigated all that during their Bitcoin expansion. So once Microsoft or a partner like Together AI integrates their models into IREN's infrastructure, the switching costs are astronomical.
Yeah, nobody wants to move petabytes of data and reconfigure hardware voluntarily, so the infrastructure is the moat.
The infrastructure is the moat.
Okay, so if the moat is that deep, let's look at how the market is actively pricing all this. Because the technical action recently has been a bit of a whiplash.
It really has.
So on February 26th, the stock peaked at 44.24, but then by March 10th, it dropped all the way down to $35.
Right, which acted as a classic psychological support level.
Yeah, I feel like retail investors saw that 20% haircut and just panic sold, assuming the growth story was broken. But then the very next day, March 11th, it shoots up almost 9%, closing at 41.47.
Yeah, that jump is fascinating.
Why the massive whiplash in just a few days?
It comes down to institutional flow versus retail panic. We have to look at what happened on February 27th. That was the effective date for IREN getting included into the MSCI USA Index.
Oh, right. Index inclusion.
Yeah, and that's not just a prestige thing. It's a mechanical trigger for global finance. Passive index tracking ETFs like Vanguard or BlackRock are legally required to buy the stock to replicate the index.
Wow, so those passive algorithms are just completely blind to the retail panic.
Exactly. They have to buy shares on the open market based on the new weighting no matter what. So they just absorb all those retail sell orders at $35, creating a liquidity vacuum.
And once the retail selling exhausts itself, the price just violently snaps back up.
You got it. The headlines were saying the market completely misunderstood the drop to 35. Long-term institutional sentiment is heavily focused on the fundamentals.
Right, like they just appointed John Gross as Chief Innovation Officer, right?
Yeah, specifically to drive data center efficiency for this massive scale-up. So the overall sentiment is bullish leaning neutral, with places like Seeking Alpha maintaining a strong buy.
Well, those algorithms might be blind to risk, but, we can't be. Let's look at the bear case. What are the institutional skeptics worried about?
The biggest one is CapEx execution risk.
Sure.
Announcing $3.5 billion in CapEx and ordering $6 billion in GPUs is very different from actually deploying them successfully. If AI demand softens, or if Dell and NVIDIA have supply chain bottlenecks,
then IREN has a major problem.
Yeah, exactly. The debt still has to be serviced. If a facility sits empty because the hardware is late, the cash flow vanishes, but the interest payments don't.
It's like buying a fleet of 50,000 luxury cars for a taxi service before you know exactly how many riders you're going to have in 2 years.
That's a perfect way to look at it. Are they moving too fast? It's the defining risk of hypergrowth.
And we also have to factor in the legacy business, right? Bitcoin volatility.
Oh, absolutely. Bitcoin has been hovering between 68K and 71K. If there's a macro shock and crypto prices tank, their legacy revenues degrade.
Which strains the cash flow they need to service the new AI debt.
Right. And then there's the geopolitical side. Market analysts keep citing this Iran noise that's creating a sentiment overhang.
Yeah, and just to be totally clear, we are purely reporting on market sentiment here. We take no political stance. But when geopolitical risks spike, institutions demand a higher risk premium.
Exactly. It causes multiple compression. The market pays less for future earnings, pulling the stock down even if IREN is executing perfectly.
But IREN is actively trying to mitigate these risks, right?
Yes. Their goal is for 80% of their 2026 revenue to come from the AI cloud. They are literally trying to extract the crypto volatility out of their business model.
Using the unpredictable asset to finance a predictable, recurring revenue machine.
Precisely. And right now, the market is aggressively pricing in the crypto and geopolitical risks, but maybe discounting the stability of that upcoming AI revenue.
So understanding all those risks, what's the timeline here? What should a listener be watching to see if this pivot is actually working?
The big moment of truth is going to be their Q3 FY26 earnings report, which is expected in May 2026.
Right. So when May rolls around, you shouldn't just be looking at their bottom line net income.
Yeah. The headline earnings number almost doesn't matter. You need to look specifically at their progress toward that $3.7 billion annualized recurring revenue target.
They need to show empirical proof that the Microsoft contract is turning into real cash flow.
Exactly. And alongside that, you have to watch the physical operational updates, specifically the GPU rollout at their Horizon data center in Childress, Texas.
We need to know if the B300s are arriving on time and getting plugged into the cooling infrastructure without any bottlenecks.
Yep. And keep an eye on macro trends, too. The broader AI build-out cycle and whether Bitcoin prices stabilize.
Okay, so bringing this all together into a final wealth-building thesis, what's the final bullish score on IREN?
It's a highly confident 9 out of 10.
9 out of 10, that's strong.
It is. I mean, the PE ratio is currently 69.36, which usually signals an expensive growth premium.
Right.
But at a price point around 41.47, it actually signals undervaluation when you factor in the MSCI inclusion and the sheer replacement cost of their physical infrastructure.
Yeah, I mean, if a competitor showed up today with $20 billion in cash, they literally could not buy the years of regulatory approvals and grid interconnection queues that IREN already has.
Exactly. So the target horizon here is a multi-year hold. You're securing a position ahead of the AI cloud scale-up and just letting the timeline unfold.
Yeah, weathering the short-term volatility for that massive fundamental shift.
Precisely.
You know, we've spent all this time talking about IREN as a crypto miner and an AI cloud provider, the compute power, the GPUs, the recurring revenue.
Right.
But considering they sit on thousands of acres of grid-connected 100% renewable energy pipelines,
Right.
what if their ultimate long-term value to your portfolio isn't about the computing at all?
Oh, that's an interesting angle.
Right. What if their true value is their total mastery of the energy infrastructure itself? As reliable power becomes the most scarce commodity on Earth. Definitely something for you to mull over as you navigate your own wealth-building journey.
Absolutely.
Well, that's all for today. Until next time.